Hello everyone, and welcome back to Explain the Charts. Today is October 24th, 2025, and we are doing an in-depth analysis of the Nasdaq 100 ETF, ticker QQQ. The market is in a fascinating spot right now, teetering just below all-time highs amidst a flurry of conflicting economic news. We've had bearish signals from corporate earnings and trade tensions, countered by a very bullish outlook on Federal Reserve policy. In this video, we'll break down that news and then dive into the charts to see what the price action is telling us. Let's get started with the current events shaping the market. The last 72 hours have been a roller coaster for market sentiment. Just 2 days ago, on October 22nd, we saw a significant market drop, with the Nasdaq sliding almost a full percent. This was largely blamed on weak earnings reports from major companies like Texas Instruments and Netflix, which spooked the tech sector. Adding to the bearish pressure were reports of a potential escalation in the US-China trade war and concerns over an ongoing government shutdown. However, the very next day, the narrative completely flipped. Yesterday, October 23rd, the Nasdaq and S&P 500 rallied to close at record highs. The main catalyst for this surge was the release of the Federal Reserve's September meeting minutes, which strongly hinted at more interest rate cuts coming soon. The minutes revealed a dovish stance, with nearly all FOMC members supporting the last cut and many expecting another one as soon as this month. According to the CME FedWatch tool, traders are pricing in a staggering 92.5% chance of another rate cut in October. This potential for cheaper money is a massive tailwind for growth stocks, which dominate the QQQ. We also have to keep an eye on the imminent CPI inflation report, as that will heavily influence the Fed's decision. So we have a classic battle: bearish micro-level news from earnings versus bullish macro-level news from the Fed. Now, let's turn to the daily chart to see how this has all played out. Looking at the bigger picture, QQQ has been in a powerful uptrend since a dramatic, high-volume bottom back in early April 2025 around the 402 level. Since then, we've climbed over 50% to establish a new all-time high just this week at 612.72. This 612 to 613 area is now our primary overhead resistance. It's the level bulls need to conquer to continue the rally. Along the way, we've established several key areas of support. The most recent significant pullback was on October 10th, where we saw a sharp one-day drop to 589.05 before recovering. That 589 level is now a critical short-term support zone. Before that, we had a consolidation period in late August and early September in the 560 to 570 range, which serves as a stronger, medium-term support level. The price structure is clearly bullish, with a series of higher highs and higher lows, but we are now testing the very top of that range. Let's zoom in on the price action from the last 2 months to see the recent story. After grinding up through September, QQQ hit resistance just above 600 and pulled back. It then found its footing and launched a new assault on the highs. Now, look closely at the last 3 candles, as they perfectly reflect the news we just discussed. On October 22nd, we see this large red candle, a drop from over 610 down to 605.49 on increased volume. That was the market reacting to weak earnings and trade fears. The very next day, October 23rd, the market completely reversed that loss, rallying from a low of 604.52 to close strong at 610.58. That bullish reversal was a direct response to the dovish Fed minutes. This shows just how sensitive the market is to monetary policy expectations right now. We are currently consolidating right under that all-time high, coiling for the next move. Switching to the 1-hour chart, we can get a more granular view of this week's battle. Here you can see the waterfall decline on October 22nd, which found a bottom right around the 599.74 mark before stabilizing. This level is now a key intraday floor. A break below it would be a short-term bearish signal. Then we can see the strong, steady climb throughout the entire session on October 23rd. The market showed consistent buying pressure, absorbing any small dips along the way. The price is now wrestling with the 611 to 612 resistance zone that was established earlier in the week. This is the immediate hurdle bulls must overcome. For an even closer look, let's go to the 15-minute chart for yesterday's session. Here we can see that after an initial push, the price found support around 604.52 and used that as a launch pad for the rest of the day. The trend was clearly up, with each 15-minute pullback being met with fresh buyers. The session ended with price consolidating near the highs, just under 611.37. This price action suggests strength and accumulation, but it's happening right below a major resistance level, which calls for caution. Intraday traders will be watching yesterday's high and low as the initial boundaries for today's session. So, to recap everything, let's lay out the key price levels and potential scenarios. The critical overhead resistance is the all-time high around 612.72. To the downside, we have immediate support at yesterday's low of 604.52, followed by the more important swing lows at 599.74 and 589.05. Here is the bullish case. The Fed's promise of more rate cuts is a powerful motivator for the market. If the upcoming CPI report is benign and shows inflation is under control, it could be the green light for a breakout. A strong move and close above 613 on high volume would confirm the breakout and put QQQ into price discovery mode, with a potential target of 620 or higher. Given the Fed's stance, I believe this scenario has about a 60% probability, contingent on friendly economic data. Now for the bearish case. The market has had a huge run and could be due for a correction. Any negative catalyst, like a hot CPI number, a major earnings miss, or renewed geopolitical tension, could lead to a sharp rejection from this all-time high resistance. A failure to break out could see the price fall back to test the 589 support level. A break below that would signal a deeper correction, potentially towards the 570 area. I would assign this a 40% probability, as it would require a distinct negative catalyst to overcome the current dovish Fed narrative. The most important thing to watch in the immediate future is the CPI report. Its result will likely dictate whether we break out or pull back from these highs. Please remember, this analysis is for informational and educational purposes only and should not be considered financial advice. Trading involves risk, and you should always conduct your own research before making any investment decisions. Thank you for watching Explain the Charts. If you found this analysis helpful, please like and subscribe, and we'll see you in the next video.